Hey, what's up, guys? Welcome back. Today is March 28, 2023, and only things important that happened today was the Federal Depositors, the Federal Deposit Insurance Corporation went in front of Congress and they basically had a discussion about why they didn't pick up on these liquidity issues. Why didn't they see how interest rates would have affected these banks more before it really started to sink the banks? And I'll get into it with a summary from today from Market Watch. So Market Watch has basically some highlights. So I'll just explain these basically shortly and then get into the trades for today on the QQQ and the NASDAQ 100, which are the same, but I trade them on two different platforms, right? So some snippets from today's what would you say, Congress meeting or discussion with the FDIC. So the FDIC basically claims to maintain stability and public confidence in the nation's banks. So they're supposed to be the backstop of the banks. So if somebody has more than $250,000 in the bank, they're basically saying you're not insured. But if you're up to $250,000, they will basically cover you in case the bank goes under for some liquidity event. The bank can basically not be able to fulfill its debts. The bank go under excruciating expenses. Something can come up that causes the bank to face an event where they can't pay out the people who have money in the bank, and then this corporation basically steps in and tries to secure the bank. They can be the bank's backstop. They can be the people's ensuring that here, if something happens, this will pay you out. We are the insurance company of the bank. But I'm hearing that even if you were to explain that you lost money in a bank run or something happened, it still might take you years for you to even get back this money. So it still is a bit risky and hugely inconveniencing if something like that were to happen. And it's still looking like that's about to boil up. I'm sure when people were in 2008, 2007, they were living normally, everything seemed normal. You saw like a crack there, you saw a crack there, but it's like it's nothing serious until we see everything come down. So right now it's almost like we're waiting for a collapse, just seeing how things play out, right? So let's get into the highlights. So on the Friday that Silicon Valley Bank closed, where the Fed officials actually stepped in, and I think some government officials went there as well. Silicon Valley Bank was set to lose 100 billion in deposits. So the thing about this versus previous bank runs is that people are not going into the branches and like pulling out money. I mean, on the lowest level, yes, but on the highest level, people are sending transfers of millions, 10 millions, 100 millions, billions from their home computer. So that's a problem where if you have a liquidity problem, things can go upside so fast. People can be selling out money right now. People can be wiring out money. People can call their bankers and say, get my money out now. People are calling their representatives at the bank, and the money is just changing zeros on the screen from one bank to the other. So it's not like people have to go down and actually cash out this money and they have to give you the physical money. No, the money needs to transfer from the bank's ledger to the other bank's ledger. And that's exactly what was happening. And it was happening at such a fast rate that the bank had to actually stop it, slow down, and some reserve representatives have to step in and kind of control everything and let the bank kind of die. So the next thing was Fed supervisors met with SVB CFO in the fall of 2021 to convey the seriousness of its concerns over the bank's management of interest rates and liquidity risks. So it's interesting that they were approaching them, but it seems like they just didn't follow through. So this is saying Fed regulators were asleep at the wheel, says Senator Scott. And they always mention these terms. They're saying they're basically driving the ship but just not paying attention. They fell asleep at the wheel, right? So he alleged that the Fed was too focused on monitoring risks to banks due to climate change than to effectively supervise Silicon Valley Bank. And this is interesting. This is saying basically the Fed, or at least some sections of the Fed, were more focused on ESG, clean climate initiatives instead of focusing on the banks that they should really be monitoring, right? So banking chair Brown calls for a clawback of SVB bonuses. So what I actually heard is that a lot of the executives took a big payout prior to this collapse. So he's saying the banks should actually pull back all of the bonuses that were paid out, because it's like when they can see a crisis about to happen, they just start to do a little funny things to make sure that people get paid out and they can actually move on. If they were smart, they would have gotten away with it, but that's still very risky. And you already did the bad, but I mean, when you're ahead, I guess it's hard to just quit while you're already doing the bad thing. So they're claiming that the government's admin will use crisis tools again to ensure that Americans' deposits are safe. It just sounds so scary. It's almost like they have to ensure you that the deposits are safe. That's kind of insinuating that they're not safe, you know? So Speaker McCarthy says a no to blanket deposit insurance. So basically he doesn't want the Fed, or the Federal Deposit Insurance Corporation, to basically offer a blanket loan to all depositors in America. I mean, that's going to take a lot of money, and if something were to break, we would experience extreme inflation, because they would basically have to print a lot of money to backstop these banks, right? So those are the main points that happened today, and I'll just read this about the stock. So stock futures up modestly ahead of today's hearing. So this is basically what was happening today. This is where the market kind of found a bottom. I entered, but it didn't turn out to be a great trade, and I'll show you how that played out today. So on trading view here, let's head to QQQ, and I only had two trades on today. So first trade was at 932 to the sell side. So 932 once we're at New York. Yep. So 932 to the sell side. And it was on this candle. And I entered at 307.40. Let's extend this so you get a better look. And then I closed it an hour and a half later, which was at 11, so on the 11 o'clock candle. So this is when price bounced and started to go back up. I'm like, okay, I'm getting out of this trade, right? So what can you see here? From this chart, we can actually see I had a bearish engulfing, did I not? I thought I had a bearish engulfing, but I didn't. But as it came into market open, you could see the MACD kind of starting to make that dive, like a plain nosedive, and then typically that's the best time to enter to the downside, in my opinion. Just seeing where the MACD is getting that shape, like sell pressure is really coming in, and then put your stop loss above here. So my stop loss was probably at 308.11, which would have been a bit tight. I could have went a little bit over here, which would have made me risk about $125 there. And then I took it to the downside. And then as the MACD started to weaken, so if I was getting a lot more strength on the MACD, sure, I'd ride it down. But as the MACD started to kind of fade here, well, we still had strong sell pressure here, but the MACD started to fade here. I was like, it's not worth it. Let me get out of this trade. I made $195, so I'll just get out after that. So that was after an hour and 30. And then the second trade was at 16, so that's 3 plus 9, so at 12.19. So on the 12.15 candle, so 12.15, double check something. Where did I exit this? So plus an hour and a half gets you to 11. 11, yes. So where's 12.15? Okay. And then I entered that at 305.71. 305.71. And then I manually closed it at exactly 1 o'clock. Just didn't like how it was trading, to be honest. So I manually closed it for a loss of 19.50 at 1 o'clock at 305.89. Let me remove this one. So enter into the sell side here. What was I looking at? I was looking at a bearish engulfing candle here, but I didn't get that strong move down on the MACD, so I didn't like the trade much. But as you can see, I could have held it a little longer and got like a 1 or 2 candle push to the downside. That's at 130 and 145 would have been my best areas to take it to the downside and make some profits there. But then after that, I had weakening in the MACD, which was kind of giving you that indicator that, yep, the mood of the market is changing, and this bullish movement could have been a nice trade to the upside, actually, with your stop loss just right below here. You'd have never came back to that level after. You'd have never ever been in trouble with your stop loss. So even after taking it, you could have taken it on the bullish engulfing candle, enter right here to the upside with your stop loss even half there. So 305.36, and then your stop loss could have been 304.36, and then you just ride it out. This is a nice clean trade. I like how it looks. I like how it looks, honestly. But I only made those 2 trades today, so I had one like nice trade where I could ride it out, and then the second trade when it didn't really move in my direction, I wasn't amused, so I just let it close, right? So the next trade I did was on a different platform, and let me see. I typically play the same direction. So at 9:30, at 9:33, I entered to the downside, same as the other one. So as soon as I finished completing the trade on the other one, I entered on this one. So I entered at 12,621.1, right? So I entered here on the 9:30 candle, and then I closed it at, what's this, 18. So you're adding 2, now you're adding an hour and a half. So it's the same. Close it at 11. At 11, I closed this trade at 12,550. 12,550.7. So this is where I closed the trade. So I had a 3-line strike candle, a bullish engulfing candle. I'm not sitting through the trade for it to reverse against me and take back all of my profits. No, I'm closing it as soon as that 3-line strike indicator comes up. I'm not following it, especially if it starts to go really engulfing, like it's destroying the previous candles. Yeah, it's not worth it at that point for me at all. So that was the first trade for a profit of 35, and then the second trade was at say add 3 to this at 12.20. So you can see it's pretty much the same thing I'm trading on both platforms. So it's one strategy. I'm not trying to do anything crazy on one and try to do something else on the other. No, it's basically the same thing I'm trading on two platforms, and it's working. It's the same thing using the same strategy on the same instruments. One is an ETF, one is an index, yes, but they're tracking the same thing. So I entered this one at 12,568.9 to the downside, and then I closed it out manually when it wasn't just going my way at the same thing around one. So on one flat, I closed it out at 12,665. Is that right? No, I closed it at 12,573. Very tight. I like that much better. I like that much better. But this is where I entered to the downside, and this is where I closed it at basically the highest point of that. So I guess while that was creating in the day, it was just really stressing for me. So let me see. After entering there, how was it playing out? So we had a bearish engulfing, and then it's just this. It started to make like a lower high, I think, or a higher, no, a higher low. So I'm like, nah, this is gonna go against me. And then it started to break down, and then it really started to break down. But you had a bullish engulfing here, so this could have even tricked me. And then it really started to go down, but I was out by this trade already. And that's basically what happened today. I really I'm really seeing how the strategy can be consistent, and I'm just taking one, two trades a day. It doesn't even matter the size. I'm just making sure that the trades are executed based on a system, in and out, just on the system. It doesn't matter win or lose. I know exactly what I'm trading. I know what I'm looking for. I know why I'm entering a trade. I know why I'm closing a trade, right? So this is what I'm seeing, and I hope you actually find some value from this, because I'm really sharing a lot, and I'm almost 100% sure this can make you some money. Like 100% sure. You know, when I say something, you know, when I find something out, it's different. And that's one of the reasons why I wanted to figure out trading, because a lot of people are not telling you the real shit. They're not talking, they're just like hiding some bullshit, or they're saying this when they mean that. No, when I figure out this shit, and I think I'm there, like right there right now, when I figure out this shit, I'm gonna change people's lives, bro. Cause this is real. I'm gonna show you the real thing. You know, when somebody knows how to do something but they can't explain it, then you don't know how to do it. But when I know how to do something, I can explain it down to the T. I can bring it to the simplest form, right? That's basically what we're doing here every single day. Hope you enjoyed this video. Tomorrow is a Wednesday. I don't know how tomorrow is going to go. I do not enjoy trading Wednesdays, but I think it's going to be a great Wednesday. And I'll see you in tomorrow's video. I might go with a smaller size, because I don't trust Wednesdays, man. I don't trust Wednesdays at all. You see how Mondays were like smooth? You get a nice rip, you get a nice dip. Wednesdays are like, what do you want? Up? No, we give you down. What do you want? Down? We give you sideways. Wednesdays are crazy, guys. So I'll see you in tomorrow's video. I hope this provides you a ton of value. All right? Bye bye, and see you in the next video.